my long-term objective and more or less what I'm looking to achieve as far as my long-term dividend investing journey is to invest into decently yielding, maybe higher yielding stocks and ETFs that are going to pay me a significant amount of cash flow, basically ASAP, or if not that, buy into different dividend paying stocks and ETFs that might not pay the most dividends day one, but have some massive dividend growth at least historically. Now, over my years of growing my dividend portfolio that you can see right here, I've learned that names that offer massive dividend growth have been a massive cheat code in order to get my portfolio to the point to where it's currently paying me north of $7,400 per month on average in dividends. Now, this is simply because ETFs that do offer dividend growth basically pay you more and more cash flow over time for simply just holding on to the shares. But in this video specifically, I'm going to go through and share with you guys 3 of my favorite dividend growth style ETFs that over time at least have consistently been paying more and more cash flow year after year, making dividend growth investors very, very rich from them. We're going to go over all the numbers and I'm going to share with you some very specific data that I'm sure you haven't seen anywhere else. So make sure to stick around, drop a like down below, and let's get right into it. Real quick for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, the first dividend growth style ETF that's been consistently paying dividend investors like myself more and more over time as far as dividend income goes is one of my new favorites, the Vanguard Dividend Appreciation ETF, or ticker symbol VIG. Now, this Vanguard ETF seeks to track the performance of the S&P US Dividend Growers Index, and it tracks large cap equities, emphasizing stocks with a record of growing their dividends year over year. Now, what's truly magical about a lot of these high quality, maybe some of the highest quality across the market dividend growth names is that even though they've been paying investors historically more and more cash flow over time, they also, for the most part, all have offered some massive growth as far as price return alone. Like VIG, for example, is up over 289% at the max time frame. And again, this is not even including dividends. This is not including dividend growth. Just by holding onto the simple ETF that pays more and more dividends over time, you've also gotten very rich off of the price appreciation. Now, here's the real magic though when it comes to this ETF along with the others' dividend growth rate. So VIG, for example, offers a 1.73% initial trailing 12-month dividend yield, which again is not necessarily going to get anyone rich anytime soon. This basically means for every $100 that you invest into VIG, you're going to earn around $1.73 more or less in dividends just based off of this trailing 12-month yield. But the crazy thing is that over the last year at least, this ETF has raised their dividends 8.16%, over the last 3 years 10.2%, over the last 10 years an average of 8.41%. And what's really cool is if we go into this data, look at the percentage change from previous year, you can see that year over year, the most recent dividend increase that we just saw as of recent from VIG was up 8.4% over the last year's quarterly dividend payouts. The quarter before that, the last VIG dividend was 16.3% larger than the previous, then 2.7%, 5.4% increased. And basically, historically, as you can see right here, they're all green for the most part. There's been a few times in history where maybe the dividends haven't grown, but there's been a ton of times where names like VIG and others that we're going to go through have grown their dividend very, very fast long term. Now, again, the cool thing about this is, and this is the main reason that I've been loving buying dividend growth names over the last several years, and I wish I would have bought a lot of these a lot sooner during my early days of investing. But if you get paid a certain amount today, you can most likely extrapolate out and assume that you're going to get paid more cash flow later on. So it's honestly sort of like having a piggy bank that just keeps paying you more and more year after year. At least that's what's happened historically. Now, another dividend growth ETF that consistently has paid investors more and more year over year, one of my favorites, SCHD, or the Schwab US Dividend Equity ETF, which of course is straightforward, low cost, and offering potential tax efficiency. And again, this ETF basically tracks an index focus on quality and sustainability of dividends. Now, I personally was buying SCHD during all the dips, during all the rips and everything in between, to the point to where as of right now, I currently own around 700 shares across all my portfolios combined. Now, just like VIG along with the others that we're going to go through, SCHD also, not even talking about dividends, is up over 228%. And this is some substantial growth considering this ETF also pays a ton of cash flow every quarter. Now, SCHD is very special and very near and dear to me because this is my largest holding as far as dividend growth ETF names. I currently have around 700 shares altogether. This ETF offers around a 3.5% trailing 12-month yield, which is not bad whatsoever. That once again means that as of right now, you're probably going to earn around $3.50 for every $100 you have invested. But also, just like VIG, this ETF has some massive dividend growth. Over the last trailing 12 month, almost 12% dividend growth. Over the last 3 years, almost 10%, 12% over the last 5, and over the last 10 years, an average of 11.13%. That is some extreme dividend growth. And looking at SCHD's chart, you can once again see the percentage change from previous year. These are all for the most part green. We're talking 15.3% year over year change for the most recent dividend payout. I'm talking 24% from the one before that, 2.4, 5.5. And looking all the way through over the years, there's a ton of times where the numbers are in the double digits for the most part. Which is one of the main reasons that this is my largest holding across all the dividend growth style ETFs, because this ETF I believe is going to have some massive capital appreciation potential long term because of the methodology and because of the holdings. But also, even if SCHD trades sideways for the most part over the next several years, I would not mind getting paid more and more in dividend income over the long term. Now, the last dividend growth ETF that also is consistently paying dividend-focused investors more and more income over time is VYM, the Vanguard High Dividend Yield ETF, another one of my favorites and another one of the gold standards in this category. Now, the cool thing about VYM is it sort of tracks somewhere in the middle of SCHD and VIG, I would say. It offers a little bit more growth than SCHD maybe because of the underlying holdings, but also still offers a nice starting yield with some massive dividend growth historically. Now, just like the others, it's up around 152%. This is since around 2006, so it has grown a lot as far as price return. And as far as dividends go, VYM's offering around 2.85% trailing 12-month dividend yield, which is not bad whatsoever, especially when you have 8%, 7%, 5%, and an average 7% dividend growth rate historically. Now, VYM's dividend increases as of recent is up around 8.5%, 16.8%. Then earlier this year, there was a drop of 8.6%, which was sort of rare. Before that, up 12%, up 2%, up 3%, up 8%, and so on and so forth. Another ETF that, at least historically speaking, has consistently paid investors more and more over the years. Now, like I said earlier, one of the main strategies of the dividend growth investor is to be able to invest a relatively small amount of money into some of these dividend growth names that at least historically have paid you more and more cash flow. Because if you simply think about it, back in 2014, when VYM was paying investors around 56 cents more or less per share per quarter, now just 10 years later, more or less, you're getting paid double the cash flow just from holding on to an ETF, which, let's be real here, is pretty simple. So that's more or less why I personally think it's pretty crucial for long-term dividend investors to at least build out a foundational position into some high-quality dividend growth style ETFs, because they're going to be working hard in the background while you build out the rest of your portfolio. And let's be real here, just after a few years, you're going to see that dividend growth rate kick in, your yield on cost is going to go up, and the compounded effect is going to take place. But now, just for this video's sake, if I were to ask you a question, and if you were to only be able to pick one, which of the 3 dividend growth style ETFs that we talked about in today's video would you buy if you had to only choose one? VIG, SCHD, or VYM? Drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.